Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. So today we got a little bit of panic in the market after what we talked about yesterday with that news about Syria hitting the tape in the afternoon, triggering that sell-off. When you have big geopolitical news like that, that could spark potential spikes in oil markets or things like that, you really have to take notice, and price action is always king. We had a little bit of a reversal yesterday, but if you just looked at the price action yesterday, there wasn't necessarily huge signs to pile out of longs or look to get short. But if you looked at the gravity of those headlines, you could obviously tell that there was the potential for something a little bit more as far as downside. And this morning, we got that gap down. We weren't able to bounce into that gap. We traded lower from there, and we definitively broke below that pivot from the last few weeks, that pivot low that we had been talking about as your level to trade against. But one thing I did see today on the Twitter sphere and stuff like that was a lot of people talking about 2008, about 1987, about a crash in the market. And yeah, the S&P was down about 1.6% today. It's a bigger sell-off than we've seen very frequently in 2013, and it's not necessarily the type of controlled dip that a lot of people like to buy, but I think people are overreacting a little bit to this. Yes, this Syria news could trigger a bigger sell-off, and I'm not compelled to buy at these levels, but it's like I was talking about on Twitter, if you follow me, is that you have to be armed with levels and armed with stocks that you want to buy on dips, and you have to be willing to enter those stocks when they've reached those levels with conviction, with confidence, using a calculated setup. We talk about a red dog reversal setup is a good way to get involved with some stocks. I don't love looking to buy the indices right now, but there are some stocks that on significant pullbacks that I would love to get involved with, but we'll get into that once we get a little further into this video. But we'll first take a look at the chart of the S&P. As you can see here, I'll take a look at the chart of the spiders, the ETF. A definitive break below this pivot here from last Wednesday. A break below the 100-day moving average today, which is significant. So that'll be an area to watch to see if we're able to reclaim that in the coming sessions. But definitely some technical damage here today. And like I said, I'm not aggressively looking to buy this dip yet, but there could be levels once we get a little bit more clarity on what the response is going to be in Syria. Yes, there could be some missile strikes. There could be some, a little bit of warfare. I don't anticipate a ground war, but I'm not a military or political analyst, so I couldn't tell you what exactly is going to happen. But I think when you have situations like this, hopefully it's not something that drags out over a longer period of time or something that boils over into something more significant. I think when you see big down moves like today, a lot of people are pricing in something maybe worse than in a few months, worse than it actually is. But it'll be interesting to see. Hopefully it doesn't become a situation like Egypt where there's a dictator in control sort of maintaining a little semblance of balance. You hate to talk about it like that, but it's a country that seems to be very fractured right now and that looks set to boil over into civil war and looks set to have a lot of major international players involved. So there are reasons for big sell-offs like this, and there's cause for concern in Syria. But like I said, once you identify key stocks and levels that you want to own them at, you separate the idea of indices from the idea of individual stocks, and I think you can get some good bargains on stocks if we do get a deeper correction. So that'll be something we'll be keeping an eye on. One of the big themes you saw today in the market was a flight to safety. When you get panic in the market, you get people wanting to fly into safe stocks. People want to get out of riskier assets, higher beta, higher volatility assets like tech stocks, like small cap stocks. And they want to get into safer assets like gold, like bonds, like dividend stocks. And we saw that play out perfectly today, talking about a flight to safety. You take a look at the chart of GLD, for example. Big move higher this morning. It wasn't able to accelerate after the big gap up, but that's a pretty significant gap to the upside in GLD into a key pivot resistance area right about here. That's about 137, 138. So be interesting to see whether we're able to climb above this pivot or whether this bounce gets contained a little bit. I'm not interested in buying gold up here by any means. It's something that I would, if you're looking to get involved to the long side, you might have missed the boat a little bit on some of these reactionary lows, but something that I would even look to potentially short in the near future if we do get another significant bounce heading into that September Fed rate decision, which I anticipate being negative for gold, but be something to keep an eye on. Gold is difficult to trade intraday, so if that's the way you trade, I would not necessarily pay too much attention to GLD. But continuing that theme of flight to safety, bonds continue to snap back. like I said, when you have panic in the market, people look for those safer assets. Bonds is obviously one of the safest assets there is out there. And TLT, a nice extension higher today, back above its 8 and 21-day moving averages, which are actually starting to curl up now after a 4-day bounce. So that's something to keep an eye on. And you sort of have a multi-month downtrend here in the TLT that looks set to get broken based on this 4-day strength. So that'll be something to keep an eye on in the coming sessions to see if the TLT, if bonds can continue to surge. Continuing the flight to safety theme, the XLU, the utilities ETF, I've been talking about this one as one that should underperform in a rising interest rate environment, which is what we've had over the last few weeks to months, ever since that Fed taper talk started. But today, the XLU actually finished about flat, so it dramatically outperformed most of the indices, and people were looking to get back into those dividend-type stocks and get out of the more risky stocks, and that played out in the utilities ETF today. So something interesting to take note of. There's a lot of evidence of that flight to safety. And then more evidence of that is the fact that you had tech underperform today. You had the NASDAQ finish down about 2.1%, 2.2% if you round up. But just another sign that people are looking to get out of those riskier assets. You had a group of tech stocks that have been weak over the last few weeks to months that have sort of been out of favor in terms of being on our go-to watch list. And then you had some other tech stocks that have been strong that broke some upper levels and look like they might need a little bit of rest, a little bit of time to let the market find its footing. But you take a look at the chart of something like Google, something we've been talking about that's fallen out of favor within tech. And it was weak today, breaking below this pivot, and it's well below its 100-day. Moving averages are curling down. Looks like this one wants to test deeper support levels after breaking this pivot right here that stands around 847. We haven't actually broken that yet on a close, but that's the next key level to watch. We broke above this pivot. It's around 854 with that close at 850 today. Obviously, we broke above this recent pivot here. The next real support level, there isn't much of one besides that little tail here on this candle, but you have to look further down into the 820 region for real firm support, which will also coincide with the 200-day moving average, which is obviously a line in the sand that we look to for stock composure. Took a look at Amazon, another one that's fallen out of favor a bit recently. It's also down near its 100-day after breaking below its recent pivot today. It was weak the last 2 days as well. While the market's been somewhat bouncy over the last few weeks, Amazon hasn't been quite as strong, but weakness there today as well. IBM, another one in tech that we've been talking about, a short thesis on, broke below a mini sort of flag that has formed over the last few weeks there, or last about week and a half here. More weakness today in IBM, and I expect this one to go lower. A lot of challenges. That most recent earnings report from IBM was very discouraging, and a lot of analysts warned on it. So a lot of different parties, the technicians, the analysts, lining up with a similar opinion on IBM that it should potentially head lower. You talk about some stronger tech stocks that look like they could need a little bit more time. There's shades of gray here, but stocks like Apple and Facebook, which I'll take a look at the charts in a second, and then Tesla actually held up really well today, but not one that I would look to be piling into with the market in a little bit of distress right now. If you take a look at the chart of Apple, some of its biggest weakness in months today is it broke below the 200-day moving average that had gotten reclaimed a couple weeks ago. You got the 8-day moving average curling down now. It's still above its 21 days, so that could definitely be a level to watch. And that's a level we've been talking about in our Off the Charts newsletter. So that 482-ish area, 481, 482, would be a level to watch in Apple if it gets down to there. This is one that I think composure has really shifted over the last few months. You've had Carl Icahn, Leon Cooperman, people like that come out and support the stock. I think it's really changed the psychology from what we saw over the last year or so when things really soured in terms of sentiment on Facebook. I think this is one that you can trust a little bit more on dips, more so than you could have a few months ago. They have a product event on September 10th, which could provide a little bit of excitement. It's most likely a new iPhone, probably the 5S, so could be some excitement, some buzz heading into that. Something to keep an eye on is Apple for a potential dip buy. Facebook, another one that I really like on dips going forward, which is what I've talked about. 36 was an area we highlighted really prominently on Off the Charts, on our videos, all over the T3 Live community, in the virtual trading floor as an area to watch. It was the 50% retracement from this post-earnings move. We got a really nice bounce off of there, but Facebook succumbed to that market weakness today. There was also reports that they found some malware, some viruses in some of the feeds of users, so that's not positive for Facebook either. But in general, I think you have a retest here of this prior breakout level is what we're seeing now in Facebook. I'm not terribly enthusiastic about buying that given the potency of today's sell-off, but if you do get a break, I would love to see a move back down to the $36 area. I don't know if we'll get that, and I would love to buy that because I think Facebook should be in the $50 range within the next several months. I really believe in this story now after that most recent earnings report. But any deeper correction than we get, besides just a retest of this prior breakout, I think is gravy, and I think you should be looking to buy it as long as the market can keep the wheels on to a certain degree. And then Tesla, like I said today, really strong in the face of all that market turmoil yesterday. It had one of the strongest tails, or one of the most significant tails that we saw in the market yesterday, and so you could have surmised that it was going to be one of the weaker ones after the market turmoil this morning, but it was actually very strong and finished positive. So a really good sign there from Tesla. Like I said, I'm not terribly enthusiastic about buying it at these levels with the market in a little bit of turmoil, but you have to note the relative strength, and price action is king. So something to keep an eye on there. For short-term traders, I'm sure they'll be watching it for two-way action the rest of the week. It's not really my cup of tea, although I have really liked Tesla on a swing basis for a long time now. And that's basically the theme for today. It's hard to come out and really definitively say, buy this dip or don't buy this dip. Everything we do is calculated. It's with a plan. We use levels. We use stops. We use patterns to identify levels to get involved with. And right now, there's not really much of a pattern that would compel you to look to buy. We look for multiple days down and then some sort of reversal signal. We'll need a little bit more downside before we get into compelling oversold areas where we might look for one of those red dog reversal type setups. So I think hands off a little bit for now. Hard to pile into shorts after a big down day like this, but like I said, if you have stocks you like, if you have levels that you like those stocks at, that you've been talking about buying a dip, when we get to those levels, don't chicken out and say, oh, everything's changed, I'm scared, blah, blah, blah. You got to have conviction in your ideas, and you have to separate the idea of indices from the idea of individual stocks. If you buy quality stocks, you could ignore the short-term gyrations in the stock market, and you can sleep better at night not worrying about where the futures are every morning. And I think that's the best approach, in my opinion, to the market, and we could get some nice opportunities here to buy some good stocks at lower levels based on this geopolitical risk and the turmoil we're seeing in Syria and all that type of news. But this has been John Darcy here for your daily recap. We'll see you in here tomorrow morning.